I've done it again. On today's episode of the Cryptoverse live stream. Press the wrong button every time. Anyway, let's make sure that doesn't play out here. Stop that. There we go. Right, so you probably saw my tweet yesterday that said I wasn't going to put out a video yesterday. Holosync gave me a mild migraine, which wasn't debilitating, but not as debilitating as a full migraine, but it was enough to kind of throw off my concentration and make it a rather unproductive day from a work standpoint anyway. Now, if you don't know what Holosync is, it's the audio technology that I use for meditation, which puts my nervous system under large amounts of stress so that it responds by growing more resilient, right? Now, if you're wondering why on earth anyone would do such a thing to themselves, well, it's just the same as lifting weights in the gym and then aching like hell the next day. So you take your muscles to, their limit and then beyond the limit, and then the muscles get stronger, right? I just happen to do that. I just do it with my central nervous system and my brain, right? Does it hurt? Yes, sometimes. Does it work? Yes, absolutely. It works as well as lifting weights in the gym. So for all of you people that tell me to cheer up in the comments sometimes, those are probably the days when my nervous system has been taken beyond its limit. So that's as cheerful I can be on those particular days. Anyway, today I want to apply the rule of three as always. Market roundup and technical analysis on a few major coins, maybe 2 or 3 major coins today. Number 2, the Ethereum SEC security declaration news. And number 3, New York Stock Exchange will launch physical Bitcoin futures. And off the back of that, we'll talk about the Federal Reserve of San Francisco and how they've put this economic letter together, applying some economic theory that states the major price correction from $20,000 Bitcoin all the way down to 6 was actually as a result of the launch of the Bitcoin futures market on the Chicago Mercantile Exchange. So that's what we're going to do today. So let's begin with market roundup and some technical analysis. I'm going to keep this pretty short because it tends to consume most of the episode otherwise. So let's just stick to some highlights here. As I speak to you right now, the markets look like they're recovering. Ethereum's now back in the green at 0.9% gain for the day, $430 billion market cap, and a slight dip in volume today. We're only $22.5 billion traded in the last 24 hours. Now, from there, we'll go over to the charts because I've got a couple of charts to show you here. Let's load up my overlay because it hasn't loaded it as it normally does. So I'll pop over to the Bitcoin chart with the US dollar. Right. So I made 2 Bitcoin buys. Let's look at the 4-hour chart here. So I made 2 Bitcoin buys. I did one yesterday at around this level here, 9,051, and I did another buy, one yesterday and one today around the same price. And that Bitcoin is now all gone into buying some bit shares at around 3,157 Satoshis. So let me actually walk you through those decisions. On Bitcoin, I already had this horizontal line of support drawn at 90.51. So I'm basically betting that this will hold and push the market upwards, right? And if we look slightly further out, I like to zoom out to this point with the auto zoom on. So I include the 2 previous, this double top from, when we went to 11,600 and then had the second bottom down at 6,400. So we saw the $10,000 bounce, and then this here is where my support level is at 90.51. And also, looking on the 1-hour chart here, we actually saw a couple of touches on this. So it did dangle slightly below that. We hit a bottom of 8,980. So, bought in a little bit higher than the bottom, but that's absolutely fine. I'm not trying to catch the bottom. But that's why I just said it the way I said it, which is I just said I am betting that this is support that will hold, right? And it is somewhat of it's not a gamble, it's a calculated risk, but it's still a bet, right? It's a bet based on probabilities. So I'm willing to accept that risk. And I did it in 2 pieces though, so I mitigated my risk by buying in once yesterday, just in case support broke, right? And then I could have bought in lower. But as it was, I got back in today, and that little dangle there below 90.51, this is actually overnight. So you're looking at 4 or 5 in the morning in the UK. So I wasn't around trading at that time. The quickest I could get in was you know, about 9 o'clock this morning when the market started to move back up again. So that's the two buys that I did. What did I do with that? Yeah, I'm hoping that that's not hoping. Hope's not a good word. I'm betting that that's the bottom of Bitcoin, and then it'll push the whole market up. Then on Bitcoin versus the no, BitShares, it's BTS BTC is what I'm looking at. BTS BTC, this is the 1 hour chart. Let's take a 4 hour view on this so we can see the perspective. This was the previous time I traded BitShares when it had a run up here and I sold right up here. So now I'm looking for another re-entry point. Looking back to the retracement of support here, this is where I wanted to get in. 3157, 3,157 Satoshis. I'm betting that's going to be strong support. So I took all the Bitcoin that I purchased with fiat currency and stuck it all into BitShares. And I'll own that decision either way, right? Someone said in the comments the other day that I had made some what they called horrendous calls, which is absolutely true, right? You're absolutely guaranteed to make some horrendous calls when trading. However, never ever do I say you should do what I'm doing. Never do I say that, right? These videos are purely for entertainment purposes, so if I make a horrendous call, you should just see that as you being a spectator and just enjoy the spectacle. Just go, haha, Chris made a bad call. He probably lost money, right? So you should absolutely not be betting on anything that I say ever, okay? So that's that. So if you're not losing trades here and there, I would suggest that's something wrong there, because the law of averages states that if you do something often enough, then a ratio will appear, right? In a run of 100 trades that you place, well, there are going to be some humdingers in there, right, that turn out to be big losers. And as long as you get out of those trades fast for a small loss, well, the price can fall for miles and it be okay. And there are going to be trades that you get into where the price then takes a massive dump, right? And that's okay, as long as you're not on the train when it dumps that hard, right? And that's also why technical analysis it's only one component of trading, right? I said this the other day, but a lot of people in the comments seem to think that technical analysis is all you need to know to trade successfully. Well, that's patently false. And that actually shows gross ignorance as to the complexities of trading. So there is so much more you need to know, which is why I made a course about it recently, right? You knew that was coming, didn't you? Anyway, on to Ethereum, because Ethereum is breaking back up above its own resistance level. So if I pop up the Ethereum chart against the dollar, this is 4 hour chart once again. Look, pretty much the same shape. They've got this little saddle curve going on here. It looks like a U shape, right? So we had those tweezer bottoms. Was it yesterday or the day before? That would be on the 7th. So it's 2 days ago now. So Ethereum is looking at breaking back above resistance at 734. And that's that horizontal white line that I've got here. You'll have seen that from my previous videos as well. It's looking like it's busted it right now as we speak. So if I go to the 1 hour chart, okay, so this is good. This is very good. So right now in the UK, we're talking about 11 a.m. That hourly bar has closed above this resistance level and the high of that candle has been broken. Now, granted, we've got this this is a sort of a bearish candle right here where we've got a rejection of a high price in the last hour. However, the fact that, the fact that the 10 a.m. candle wasn't able to break the resistance, the 11 a.m. candle was closed above resistance, and then the high broke. Well, that's to me normally confirmation of a breakout. The only other thing I would take into account here is that the Ethereum is setting lower highs consistently over the last few days. So if I draw this, that's a technical, whoops, if I can let go of it, that's a technical downtrend. However, at the same time, it's setting higher lows like this. So you've got this pincer going on right now. So this is an inflection point for Ethereum. This support level is reasonably significant. I like the fact that it's closed above it. However, look at that. This is almost the perfect technical downtrend line for lower highs. So I'm actually just leave that on there to monitor it. So I wouldn't trade this right now necessarily. Ordinarily, I would trade that as sort of a breakout of support. Sorry, a breakout of resistance. However, you take this into account and it doesn't look like great, does it? So we'll see if that rally continues. If it continues and busts this downtrend line here, then that's great. Then it will be above both moving averages, which it's struggling to break above right now. And then if it busts this line, then we should be going back up towards 818. I'd be pretty confident about that. So if you want to pause the video, rewind it, draw that same downtrend line. That's Ethereum against the US dollar on the Bitfinex price feed. Look at the hourly chart and then just copy that trend line, join the 4 peaks up and keep an eye on that level, okay? Because what we want to see, if you really want to know, is the same sort of price action as this, right? You want to see a green candle that breaks above this downtrend line, closes above it, and then breaks the high, right? So the candle that follows the breakout candle. So if this was the breakout candle right here, this is what we want to see. Imagine this horizontal white line was this downtrend line. So we want to see a candle like this break out, close above it, then the following candle goes higher than the high of the breakout candle. So this pattern needs to repeat itself above this downtrend line. That's what I want to see before I'm confident we're going to be shooting right back up to 818. So that's it for Ethereum. Most of the altcoins are kind of chilling underneath their moving averages over the last couple of days, but it's not ideal, but I'm not particularly worried about that. The only other thing I want to talk about is a quick follow-up on Dash, because Dash had that significant level of resistance that it bounced off. Let's see here. Back over to the 4-hour chart, Dash against the US dollar. I mentioned this the other day. Look at this brilliant technical resistance with 3 failed tests and 2 failed breakouts. Pretty significant. That was actually followed by a 20% sell-off from top to bottom. So the resistance was at 505-ish, and now we had this big old sell-off down to, it wasn't quite 20%, $411. It might look more stark on the 1-hour chart. Look at that, boom. Bust down below the support level at 457 and then hit a bottom of 411. You know, perhaps it was fortunate. You know, the other day when I said I was going to buy Dash when it hit its 200-day moving average, not 200-day, I think it was the 200-period moving average on the 4-hour. So going back here, I wanted to buy right here at about 447, and my bank blocked my debit card from buying through Bitpanda. Maybe that was destiny. Maybe it was fate, and my card got blocked, because I'm now in the process of getting the card unblocked for purchasing from Bitpanda, and now I can purchase at a much lower price. So thank you very much to the bank for that. That was the one time I'm actually pleased my card got blocked. Either way, I would have owned the decision, right? You know, I was still confident I would have made money on that trade anyway, even if I'd have bought in at 447. So that's that. That's enough of the market roundup and technical analysis. Let's move on to the SEC and Ethereum being a security. Well, basically, I think we've all been victims of misinformation here, which I'm not particularly happy about for a couple of reasons. A couple of reasons. The first is that I'm thorough, right, in my research, normally. But this is one that slipped through the net. And inevitably, you're going to get stuff that slips through the net, right? This didn't just happen to me, though. Michael at Box Mining apologized for this same thing yesterday as well when I was watching his videos. And this happened to me because on the day I made that video talking about this, I only had so much time to research the issue, right? And I did go to the source like I always do, right, to do a fact check. In this case, that was going directly to the SEC's website to validate what the media headlines were saying and so on. I'm like, okay, where did this come from? I want to get to the root of it and find the source material, what in journalism you call the primary source. And that's the thing I want to make sure is there before I start stacking narrative on top of it, right? Now, when I went to the SEC website, I'll be honest, back before I made that video, I wasn't actually able to find anything listed on there in terms of their hearings or scheduled meetings and stuff like that. But I just figured it was because I figured I just wasn't able to find it with the amount of time that I had. And if I committed more time to it, I would be able to find it. Now, the mistake I made was to go ahead with the video anyway, right? So I'm now kind of forced to go back and say that this is probably fake news until such time as I see a primary source that verifies exactly what's going on here. And the only source that would give me that confidence is the official SEC website itself. Otherwise, it's just hearsay. And this is a good lesson, really. What we can take from this, you know that phrase that says a lie can make its way around the world twice before the truth has even got its shoes on? That's kind of what happened here. And I was even guilty of perpetuating something that wasn't verified, which I ordinarily would do. But I tell you what, here's even in a more abstract level, here's the underlying problem. The incentive system for YouTubers and podcasters, it only allows for a certain amount of depth of research, right? To make content creation sustainable, content has to be put out regularly and consistently. And doing very in-depth research is very time consuming. Excuse me. And because crypto news in particular decays so quickly, many of us just can't afford to spend huge amount of time fact checking every single detail. Because if we did, we just wouldn't be able to survive as content creators. We would put out maybe a video a week or a video maybe a couple of videos a week, and we'd miss tons of stuff. And then also that wouldn't be enough content to actually sustain ourselves as a content creation business. So the incentives are all out of whack there. And in my case in particular, I have other crypto businesses to run, right? And without those, I wouldn't be able to afford to do the content creation stuff anyway, right? So there is no perfect model as far as I can see. We just have to kind of do our best and then take it on the chin when something slips through the net. Maybe I need to hire a researcher or something. If you're interested, let me know, get in touch. But all we can do is, strive for excellence, not perfection, as Martin Weiss said to me the other day. Moving on to the final story of the day, big one. New York Stock Exchange will apparently launch physical Bitcoin futures. So who said that? Well, that was something that came from, I think it was the New York Times. Here's the New York Times article. Now, actually, before we get into that, speaking of fact checking, check this out. I've highlighted this bit in orange halfway down the article here. Check this out. It says that the parent company of the New York Stock Exchange has been working on an online trading platform that would allow large investors to buy and hold Bitcoin, according to emails and documents viewed by the New York Times, and 4 people briefed on the effort who asked to remain anonymous because the plans are still confidential. Anonymous sources. Great. Now, the reason I mention that is because after that mistake we just made with the SEC thing, I'm now temporarily kind of on hyper alert, like hyper paranoid that we're being intentionally misinformed with this kind of stuff, right? Now, that's just because my paranoia is heightened temporarily, right? Now, the article does say that this is a planned project and could therefore still be scrapped. So let's not go crazy just yet. If this were to go ahead, though, it would be significant because the plan is for it to be a futures market that is physically settled, right? And that would have a much larger impact on the Bitcoin market than, say, buyers and sellers of the paper contracts, like the cash settled ones, because buyers and sellers would be physically taking possession of the Bitcoin rather than just, doing that paper trading on cash settled markets. Having said that, though, this is combined with another story that I found. Here we go. Check this out. So this is, if I go back up to the beginning of the article here. So this is on the website for the Federal Reserve Bank of San Francisco. And the first thing I've picked out here, it says, the rapid run-up and subsequent fall in the price of Bitcoin, this is, after the introduction of futures, does not appear to be a coincidence. Rather, it is consistent with trading behavior that typically accompanies the introduction of futures markets for an asset. So this is a letter, right? It's an economic letter talking about how futures trading changed Bitcoin's prices. So this is kind of interesting, right? So they're saying the rapid run-up and the subsequent fall in price after the introduction of futures doesn't appear to be a coincidence, right? They say introduction of futures tends to follow this path where optimistic speculators bid up the price, and then when futures are introduced, that allows pessimists to then short the price. And they say that cycle has repeated itself, and economic theory suggests that is exactly what should have happened. Oh, I just thought of something. If that were true, why didn't these people bet on it, right? Or maybe they're just academics and they don't really bet on the theory, they just like to pontificate. In any case, moving on. The next bit here says, the peak Bitcoin price coincided with the day Bitcoin futures started trading on the Chicago Mercantile Exchange. The advent of blockchain introduced a new financial instrument, Bitcoin, which optimistic investors bid up, until the launch of the Bitcoin futures allowed pessimists to enter the market, which contributed to the reversal of the Bitcoin price dynamics. Well, wait a minute. Wait. I know this is the San Francisco Fed, right? And I'm just little Chris Coney on the internet, but I've got to say they're incorrect here, right? The notion that the Chicago Mercantile Exchange futures was the first option or the first opportunity to short Bitcoin, that is false, because Poloniex already had Bitcoin lending on their platform, right, for short sellers. And BitMEX, they've been around since 2014, right? So that's why I say that's false. However, where they are probably correct is that major institutional traders, they probably weren't allowed to use those platforms because they're unregulated. So they couldn't just sign up for BitMEX and then, you know, start shorting Bitcoin back in 2015 or 16. With the CME futures, right, as a futures contract, that opened up the floodgates. So from that point of view, all the institutional traders could have flooded in via the CME. So from that point of view, the San Francisco Fed is correct. So we'll kind of agree on that. But I'm kind of just pinning down the detail of what's true and what's false. What's false is you could have shorted Bitcoin prior to the futures contracts launching. You and I could have, but institutional investors and traders probably couldn't because those platforms were unregulated. So there we jolly well go, is what I say to that. Applied economic theory that suggests that the biggest contributing factor to that big market crash this year was because of the launch of the Bitcoin futures markets. Let's have a discussion in the comments. But until then, that's all I've got for you today. So if you like this episode, go ahead and hit that like button. And if you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And if you'd like to learn how to trade cryptocurrencies, why not check out my brand new course on trading cryptocurrencies. It's called The Master Cryptocurrency Trader. There's a launch offer on with a near enough 50% discount, so check it out on cryptoversity.com. I'll put the link below for you. But until then, guys, it's me, Chris Coney, saying bye for now.